Hi, good afternoon, everybody. It's a great pleasure to be here today, and thank you very much to all of you for coming around to see our panel on responses to climate-related financial risks. And we want to have a special focus today on leveraging data, technology, and innovation. So I'm very happy that so many amazing speakers have actually accepted my invite to speak about this very important topic with me today. And yeah, all of our speakers are great experts in the climate risk space, and I'm very happy to discuss the topic with them today. So I'm very happy to hear from Liming Ong, the Director of Data Management and Statistics Department at Bank Negara Malaysia. And she's also co-chairing the NGFS Expert Network on Data, and she's also Head of Secretariat of JCC Subcommittee on Bridging Data Gaps. Thanks, Liming Ong, for joining the panel. Second speaker is Georg Lehecka, the manager of the Sustainable Finance Hub at the Austrian Financial Market Authority. And in his capacity, he's responsible for sustainable finance and sustainability risk issues. Third on the panel is Harry Lee, the head of Data Governance and Transformation Division in the Monetary Authority of Singapore. And he's responsible for developing and implementing the MAS data strategy. And last but not least, Olivier Treco, Regional Head of Sustainability Customer Solutions at S&P Global Market Intelligence. He is covering Asia, Pacific, Middle East, and Africa, and he's based in Singapore and has experience for more than 15 years. So my name is Patrick. I'm an advisor at the BIS Innovation Hub Singapore Center, where I lead the center's work on subtech, regtech, and also green finance. And under green finance, we also have the climate risk topic, and where I lead a project on climate risk. So with my experts today, I would like to explore current developments around climate-related financial risks and how central banks and financial institutions respond to them. And as said, we want to have a special focus on data, technology, and innovation. And with that being said, I would say let's deep dive into the topic. And at the start, I would like to start with a very speedy round of questions and answers. So I would ask my panelists to limit their response to 1 minute for this first question. And I would start with Liming. Liming, maybe you can tell us what are, from your perspective, the key climate-related financial risks that central banks and financial institutions are currently faced with?
Yeah, thanks, Patrick. So to start off, the key climate-related risks that's facing the financial institutions and also central banks are typically physical risk and also transition risk. And also one that is less spoken about is in terms of liability risk. And this climate-related risk is in the form of mainly physical risk and transition risk, would then be transmitted to the FIs through various economic transmission channels, and this will be impacting in terms of the businesses and the household as well as the broader economy. So this climate risk that I've mentioned are the key drivers that will be also impacting most of the commonly risk that is known to the FI. So for example, credit, market, liquidity, and also operational. So in terms of our response to the climate risk in Bank Negara Malaysia, we have put in place a few building blocks that we believe that will be important to improve the ability of our FIs and also the central bank to manage this climate risk. So the first one is in terms of the establishment of the Joint Committee on Climate Change, which is called JC3. And this has been in place since 2019 as co-chaired by the Central Bank and also the Securities Commission. And this is actually to ensure that the regulators and also industry players come together to foster climate resilience within the financial sector. And the second one is in terms of the establishment of the climate taxonomy, which is called CCPT. This was issued back in 2021 that would help FIs assess and categorize economic activities based on its climate impact. Thirdly is on the mandating climate disclosure by the FIs, and this in turn would actually generate the demand for more climate data to be made in place. So that's why we believe that it will actually create a virtuous cycle of information flow. fourth is regulatory standards. And we set the expectation for the FIs to effectively manage the climate risk. And fifth is the integration of these climate risk considerations into macroeconomic and also financial stability assessments. And for example, through having industry-wide stress tests, climate stress tests. And fifth, this is the most important point, is for the central bank to also lead by example. So this is to ensure that we practice what we preach as well. So we are embedding these climate considerations into our, for example, reserves management, currency operations, and our day-to-day activities. Yep.
Yeah, thanks a lot. It's very promising to hear that central banks are really understanding the importance of this topic and trying to lead by example. So in the next step, let's come from the central bank to a data provider. Olivier, what would you add in terms of what are the key climate-related financial risks?
Thank you, Patrick. So I think we really, in the framework of course, of what Li-Ming mentioned, for me, in terms of so I don't want to add to the risk, we know physical risk, transition risk are what's facing our clients, and the financial institutions in the region. The key, I would say, two key topics are dominating our stakeholders' concerns. One is coverage, and the second one is integration. The first one is making sure that financial institutions have many different kind of assets. They have listed assets, they have bonds, they have project finance, they have mortgages. So how to make sure that in their assessment they are able to have all these assets with all their different peculiarities taken into account. So that's the number one concern and risk in a way that they face, not to be able to comply with regulation and expectation for the entire portfolio. And the second one is integration, and hopefully I come back to it a bit later, but is how to make sure that those different assets, those different frameworks come together into one consistent framework and one consistent output which is usable for decision-making purposes. I think the consistency of having one mindset and having a good overview of all the risk across all the asset classes into one output which is actually usable for decision-making purpose is the number one concern, I would say.
Yeah, thank you very much. I really like that comment on having the right mindset on this topic. That is a very important point also from my point of view. So having heard about these climate-related financial risks from a central bank and from a data provider, maybe Harry, may I ask you to add a little bit and to share with us how MAS has actually responded to these key climate-related financial risks?
Thanks, Patrick. Thanks also for the opportunity to speak at this panel with fellow distinguished speakers. I think I don't have much more to add to the risk that Li-Ming as well as Olivier has highlighted. I broadly agree with these. So I think I would focus my comments on how we respond to these risks. I think the main point that I want to make is that we are focused on how to better use available climate data. There are a couple of things that we're working with fellow regulators on. I think off the top of my head, we've been involved in work to look at to use alternative and unconventional data to better trace out supply chains so that we can understand things like Scope 3 emissions, which are very reliant on the supply chain of a firm and an entity. The second thing that we're doing is we're working again closely with other regulators on using digital twin technology so that we can map physical risk indicators to meaningful financial metrics. One other thing that we've been doing is that we are steadily trying to build tools that integrate both structured, unstructured data so that we can put out holistically some of the things that Olivier mentioned. How do you put together a picture of the risk that the financial institution as well as the financial system as a whole can see? It forms a basis for, I think, a more informed discussion between financial authorities like us, as well as our financial entities that we supervise. The last thing that I would make is to echo a point that Li-Ming made, which is about climate stress testing. Climate stress testing is very important. If you impose a consistent scenario on regulated entities, you can then have a very clear picture of where the most impactful risks are. And then you can have a more focused conversation on mitigation, adaptation, and adoption strategies. Thanks.
No, thank you very much, Harry. And it was great to hear that MAS has started to look into different kinds of technologies that can be actually used to tackle climate-related financial risks from the perspective from a central bank. We will definitely have a closer look at that as well later. But first, let's quickly hand over to Georg to provide his view from the Sustainable Finance Hub.
Yeah, thank you very much also for inviting me to this great conference and to the panel. from our point of view as a financial supervisor, there are two main points here. The first one is that our financial market participants, the supervised entities, as we call them, as they must be able to integrate sustainability risks into processes, in the risk management. And of course there are climate-related risks, transitional risks, physical risks, but there are also new risk categories, emerging risk categories, for example, nature-related risks, so biodiversity risks, and also greenwashing risks. So in our case, to help our market, we already 4 years ago, we published a guidance document to our market, really to help then the market in a very practical way to integrate the climate and sustainability risk aspects in the processes, and now we're in the process of updating this guide with for example, biodiversity risk and greenwashing risks. And the second part is that we must be able to monitor the risk of the market and to assess the risk of the market and of individual financial institutions and their portfolios in order to have targeted supervisory measures, of course. And there we follow two streams. The first one is also climate stress testing, but still I must admit there is some room of improvement also within Europe and also within the market. And the second part is the greenwashing aspects. We have in my jurisdiction or in Europe in general, we have a thriving sustainability market share. It's still increasing. A lot of sustainable financial products, and there is important when it comes to collective consumer protection that the ESG credentials, the climate-related credentials of financial products are really lived up to in their actual investments, so that a product that calls itself sustainable or green or whatever lives really the green aspects in the investments itself. And I will talk about this approach a little bit later in more detail.
Yeah, maybe we directly have a look at some of the points that you have mentioned, Georg, and maybe you can share some more insights in how you actually use data, technology, and innovation to utilize, to drive mitigation and adaptation efforts from your point of view, and would also be nice if you could provide some examples for us just to get a better understanding of how you do that at the FMA.
Absolutely. As I mentioned before, the two different streams, the one is the risk category, the risk of the financial market, the other one is also the greenwashing aspect, so that the market aspect itself, the financial products. And we have, I must admit, we have some data challenges, and also the market itself has the challenges. So there are a lot of data, but the data are not well structured, they are very complex, there's a lot of data, and also unstructured information. And here it's important to distinguish also the two different use cases. The one is the risk. Here we really need data on ESG, on climate-related risks, which is completely different, or quite different, to the question of analyzing greenwashing cases. Here I'm not interested in the risk itself, in climate-related risks as such, but I'm interested in the exposure of a product to certain climate-related or sustainability ESG-related aspects. For example, investments in oil companies, child labor, corruption cases, whatever. And this is something really different from the risk. Yeah, you have to bear into mind. What I would like to give you as an example is our greenwashing assessment framework, something we have established to analyze financial products. This is something really to analyze individual financial products and the companies to find potential greenwashing cases, issues. We will look into it in very specific deep dive supervisory measures like off-site but also on-site inspections where we really go to the institution, look into their procedures and so on. And our challenge in the beginning was we have a lot of products. As I mentioned before, we have a large fraction of our market is actually in a kind of sustainable. There's a huge difference between different products. Yeah? We have at the moment no kind of labeling approach within Europe, so kind of minimum standard in a way, so that any product that calls itself green can have different credentials in principle. Yeah? And therefore it's quite important for us as a supervisor to analyze these products, whether they really live up to their promises in the end. So we have a lot of information. We have pre-contractual information, documents, ongoing reportings, and so on. There are a lot of data and a lot of text. And they have the investment policy, in particular, where they describe the investment policy on ESG-related matters. For this purpose, we have set up a tool which also uses AI technology and machine learning to screen all the documents, which is also quite complicated to collect documents themselves in a way. Has to be done sometimes also in an automatic website screening approach. But then you have the documents and we have to screen them, and therefore we had to implement a machine learning tool really to read the specific parts and the language and the ESG claims they have in the products. Yeah. There we really gain a lot of data, and then you have this is the we call it we analyze the image of sustainability of a product, and then the next part is you have to analyze the investing and sustainability part. This is something we have done by acquiring commercial data from data provider, from a boutique data provider to our needs, which was also not easy to find. And I look to my colleague here from another data provider. And in the end, we have a rule-based system really to match the sustainability-related claims of a product to the investments. And if there's a mismatch, it's much more complicated, as I explained at the moment. If you have a mismatch, then a supervisor, really a human expert, is going to analyze it in more detail, and then there are follow-up supervisory measures. And therefore this approach is very targeted, and I must also say the machine is a tool, it helps, but you still need a human expert to assess in the end. There's also a lot of false positives in the process itself. Yeah? So machine is a tool, but still human expert knowledge is absolutely important. Thank you very much.
Yeah, thanks a lot. It was very interesting to hear your insights on greenwashing, but also on the technology that's used, like AI and machine learning. That was very interesting to hear. I also liked your comment around data and it's important, and you mentioned catalogues that we might somehow build upon. And building on these catalogues, I would like to quickly ask a question to Harry on data directories and catalogues and how they can actually play a meaningful role in our discussions about climate-related financial risks. And now that I hand over to you, Harry, maybe we can also quickly have a quick look at two questions in the chat, because I think they're referring to your earlier response. The first one was on what climate stress testing actually is, and how we can use new data sources for that, like satellite data.
Thanks for the question, sir. I was just listening to Georg, and I was thinking to myself that, there's just a lot of stuff that he had said that I wish that I'd known, like that was readily available to me, put somewhere quite cleanly so I can access it. So, I mean, at the start, one of the first interventions I made at the start of this panel was to say that it's about using available data better. It's also about finding what this available data is. I think broadly, there's broad agreement, people who fiddle around with climate, who are in the ESG space, that there are two things to do. We want to use the available data better, and we also want to we wish that we had more data that's available to help us do climate risk analysis. So I think these are the two broad themes. That's why I think catalogues in general will have a role to play. What catalogues do basically is to make very clear, document down what the available and desired data are. So this is something that I think the catalogues can help do. By making clear the available data, then you actually, and how this data is used, we can then have a more meaningful discussion on what are the actions that we can, what are the analysis that we can do on top of this data, and figure out how other people are using this data. So the first thing is you got to find out what available data are. By also listing down and stock taking the available data, you also make very, very clear what the data gaps are. If you know that you have this, then you clearly know you don't have something. So I think doing a stock take is important so that you basically know what are the data gaps that you are faced with. The last thing that I think data catalogues can do, which I think is quite useful, is that it clarifies a few things. It clarifies if the issue that we are confronted in the climate space is more methodological in nature, or is it really a raw data gap? So there are a lot of climate use cases that I've seen And it's not often the case that the data isn't there. There's some data that you can use to triangulate and make better sense of the issue. Then it's about adapting and applying the right methodologies on that raw data. It's not often the case, and I would say that there's this perceived position that there's a huge data gap out there, there are many things missing, but it's not true. There are data, and it's about how you apply the data, adapt the data, use more advanced analytics to get what you really want out of it, to triangulate some sense of what the issue is. Well, I can go on and on about data catalogs. Another thing about I think data catalogs are quite important to do is, and helps in this space, is it really foster an awareness of the issues. Some of the things that George was talking about, can you imagine if you found all these things in a data catalog, you had a place to go to? Well, what actually happens there is that you learn about what other people are doing to handle different types of greenwashing, what are the techniques out there. So it really, I think it cuts the time for different financial institutions to gain insight about some of the climate issues that they are wrestling with, that they are facing, and that they may not know how to do or how to address. So I think catalogs, again, have that role. The last benefit of actually making an effort to stand up a data catalog is, I think once you visibly put out the data sets that are out there, you can then have a conversation on how to converge to more consistent and more comparable global data and disclosure standards. Because if you don't know what's out there, you're all talking in pockets. So I think we need a place, a platform where we can pull things together so that there's a proper conversation on what needs to be done. There's some scope to start to align across the different data and data standards that are out there. And then there's actually a practical reason why we would want to make that, why data catalogs matter. The truth of the matter is that, I mean, George, you did a lot of work, right? Like coming up with all these analytics. I'm sure when I hear from the rest, they would have the same things to share. But I want to point out something, which is that if I have a data catalog and I make it publicly available, it serves as a public utility. As a public utility, I invite data providers, come, share with me, publicize your data on the data catalog, so other people can know about it, right? So then the work that you each individually do to consolidate and compile data is amplified. So I think that's one thing. If I make my data directory or data catalog open source, free for users to upload stuff onto it, there's another benefit. A lot of climatologists out there, they are doing really, really deep research, compiling specific physical risk indicators and physical risk databases. They can then share and publicize the work that they have. So I think that also helps to raise awareness about what's available and the techniques available to understand climate risk. So Patrick, you had a question on climate stress testing. So what are climate stress testing? I think quickly, just to answer it, it is about coming out with a set of scenarios. Typically, we take reference from some NGFS scenarios, for instance. I think that's quite a common thing. You translate it to meaningful physical risk indicators, and then it is down to the financial institution to translate that physical risk indicator. Maybe it could be flood incidence rates pick up, then you have a flood event that's one in 300 years occurring in the next year. And then you figure out, how do you translate that to actual financial metrics? It will be things like, what are your exposures to that location? It will be what kind of insurance you have. How can you transfer your losses away? What are the safeguards and contingent mitigants that you have in place? So I think that's what we're trying to do. And again, let me come back to data catalogs. Having data catalogs that also track the analytics that are available will help financial institutions better size the impact of different climate risk scenarios. Thank you.
Yeah, thanks a lot, Harry. I perfectly agree that data catalogs and data directories can play a very important role when we talk about where can we actually get the data from for the climate-related work that we do. And there was a question in the chat to share some experience around how we can actually develop such a catalog, and I think Li Ming is the perfect speaker to answer that question.
Yeah, thanks, Patrick. So I think in terms of the data catalog, the benefit of it, I think a lot of it is actually already covered by Harry. And I think in terms of how, for those who are considering to start on this journey, I think a good reference would be the NGFS Data Directory, which is a very structured process in terms of matching, in terms of who are the stakeholders, what are the use cases that they have to the metrics and also the data items down to the data sources, if those are available. So I'm part of the NGFS. The previous workstream was called the Bridging Data Gaps. So we actually there was a data directory that has been published in 2022. So those are the global sources. And then shortly after that, we saw that, that actually, because for the NGFS Data Directory, it is very broad. It's a global sources. And we do see that actually there are merits to actually extend this to the domestic side of things, where we will also cover the depth as well, in addition to complement the breadth that the NGFS Data Directory has. So that's where we came up with the JC3 Climate Data Catalog back in 2022. So that data catalog is actually available on the jc3malaysia.com website. And that's where we find that there are really clear objectives and also the benefits that have been elaborated by Harry just now. So besides being a source of reference and, in terms of making data more accessible, this is also to ensure that the data gaps, something that we actually took on extra is that here we also actually make note of the observation on the data gaps. So for example, if the data sources are not available, or if it's available, then whether is it sufficient? Is it granular enough? Does it cover geographical coverage that meets the user's need? So those things are actually documented. And what this actually means is that we want it to be a call to action to the data providers to come and provide this data, because this is clearly very useful to the stakeholders. So we find that this is a very concrete tool for us to actually engage data providers to come together to actually meet this data that is needed. And to me, we call this data catalog a door opener, actually, because previously we have actually engaged, for example, the data providers, and sometimes you'll get very defensive. They're like, what data gaps? Because whenever we mention the word gaps, then people actually started getting very defensive. And that's like what Harry said. If let's say we have actually a very structured process to document what is actually needed versus what's available, then it's very clear what are those gaps there. So to me, it is really a door opener, I would say, and also a conversation starter to actually get, like in terms of conversations with public data providers, for example, when it comes to ministries, to come together to provide the data that is needed. And also over time, we see that the work that we have done actually translates to higher data availability as well. So when we first did the data catalog back in 2022, the data availability rate was 49%, which is actually, to me, is higher than most people were thinking about. And over time, we actually prioritize those data gaps that we like to bridge, and then we reach out to those ministries, and we ask for those data to be made public. And over time, we do see that there's actually an increase in terms of data availability. So this is actually a quantifiable KPI that we can actually track over time. But having said that, we also know that some data is not, cannot be made available overnight. So for example, I'll give, for example, would be the flood mapping, which is very extensive. It needs a lot of data. So just to give you some perspective, like for example, Malaysia, there are actually, with the geographic areas, there are actually close to 200 major river basins. So obviously mapping these river basins in terms of looking at the rainfall, in terms of looking at that runoff rate, it's actually would encompass a lot of data collection and also modeling effort. So we also understand from the authorities that this is something that would take time and it's not something that would happen overnight. And also in terms of the challenges, I would say that mainly it's the validation of data needs. And like what Harry mentioned just now, some of it is actually, they will just tell you like, yeah, I want to do stress tests, but yeah, like in terms of the data that's needed, they are not very sure. So sometimes it's a gap in terms of methodological understanding what data is needed. And also some data is scattered, and also there are data quality issues as well. So some sources that we have put in, we just need to make sure that the data quality is there. And also next is actually in terms of maintenance as well. We maintain it on an annual basis, and now it has ballooned to about 600 rows of data with 400 data sources from 200 data providers. So obviously, we will need something more sustainable to maintain this from a technology point of view. And also, I think going forward, it will be crowdsourcing is very important as well to get input from the data users directly. And it actually relieves the burden of having one party to maintain it. Yeah,
thanks a lot. I really like the call for action to data providers, which directly brings us to Olivier. And we're running a bit out of time, so maybe just a short answer, but it's just so great because Li-Ming touched upon it. Maybe you can quickly let us know, what do you think is the problem in creating climate data tools, and how can we actually facilitate and enhance collaboration on it?
Thanks. And first, as a data provider, I really want to say, what data gaps? No, but I really like your point, and I think it's important for us to really work with and have that insight from central banks and from the regulators and from the catalogues to actually identify the gaps. My first point was that our clients and financial institutions have coverage as an issue, and for us to be able to know what are the opposite of coverage is the data gaps, right? So where I think we all have an interest in identifying what needs to be covered and how we can work together to serve the same purpose, right, which is having the highest coverage possible. The second point I wanted to come back with to mention difficulties and obstacles is Harry's point about comparability. I think that a lot of that, and as a data provider, I think we have our specific view into comparability of data. I don't think the idea is to say, let's look at, I think sometimes there's a focus on correlation between different data providers and so on and so forth. I think for me, the key point for this is for clients, for financial institutions which need to choose their data, is to understand the underlying assumptions behind a data set, because a lot of these things, what you need to, they are numbers, they're projections, the scenarios we're doing, right? We're using science, NGFS scenarios, IPCC scenarios, and so on and so forth. So really the key is to make sure what is 89 better than 57, what are the assumptions, and is the story that effectively that data set is telling, working for my purpose, right? And do I understand and do I have full ownership of the underlying story? And I think another point that Li-Ming mentioned is that, all these rows of data, I think we need to make sense of, again, there is a lot of data, and being able to pinpoint and have the actual one, I think is very critical. I just finished, and I wanted to come back to George's point about, I think you mentioned nature and biodiversity, and we have this discussion about technology and innovation, and I think I'll merge my last 2 points, which is integration, right? So we talked about satellite data. I think a lot of these things now, and when we talk about stress testing, we need to know asset location. So we need to have assessments which require latitude, longitude, and then be able to upload assets, houses and buildings, into a platform, and then run scenarios on climate stress testing, on nature risk, and so on. So that's one difficulty here that everyone is facing, and where we're supporting clients is, again, bring all these together, because you have several different platforms, and that's a feedback we often have, is that there are very different great providers, but everyone has their own solution, different platforms, different onboarding. How do you make them speak together and have an integrated workflow? And the workflow assessment, the unified data management, is sometimes even more important than the actual data methodology. I think in the region what we see is that people are actually, and clients are advanced in terms of methodology. There's a great knowledge and understanding of Scope 3, PCAF compliance, NGFS scenarios 5, and so on and so forth. But the data management, making all those work streams speak together and have one user-friendly output, that's a frontier as well in terms of bringing all these together.
No, thank you very much. I mean, that was an extremely insightful discussion, I think, that we had today. Now, I know we are running out of time, and I want to apologize because there are so many other questions in the chat that I was not able to ask my panelists. But maybe just a quick recap on what I wrote down is that I think it became very clear that climate-related financial risks are very important for us, and they will become more and more important over the next few years. And it was very promising to hear that the institutions that were and data provider that were here today were really aware of that problem. We're really trying to leverage on data, technology, and innovation. We have heard about Gen AI. We've heard about digital twin as technologies. We've heard about data catalogues and data directories as example on how we can actually provide more data and better share data and work with better data. So it seems to be all out there. And I would really like to thank my distinguished speakers and you as an audience for the interest in the topic. I think we have gained some really, really meaningful insights today, and therefore please join me in a huge round of applause for Li-Ming, Harry, George, and Olivier. Thank you very much.